I'll show you how we could use our fair value gaps to create a bias, a story, a narrative, everything entries, and why we don't need to use anything else, and how that will actually help you guys in the long term. So here we're going to be looking at gold. We're going to be dissecting price action, how we can actually use our fair value gaps. And again, this is what I do with my students. I do talk in depth with my fair value gaps. So if this does help you guys, just like the video, just subscribe, join the Discord, whatever. Cool. How do we come to the conclusion that price is bullish, right? We have our bearish fair value gaps, we have bearish ones here, but how do we actually know price is bullish and that we're actually going to disrespect these 4-hour fair value gaps? Our first step we're going to be looking at is there any higher time frame fair value gaps? So by understanding if there's any higher time frame fair value gaps, so that means your 4-hour, your daily, your weekly, your monthly, even your yearly fair value gaps, we can determine if price action is bullish or bearish. All right. So here, if we go to the daily time frame, what can we see? Well, we can just see that price is bullish because we're respecting our daily fair value gap. And now if I just slap on a random fair value gap indicator and just mark out every single daily fair value gaps, we can see that price is respecting our daily fair value gaps. All right, beautiful. So we know price is bullish. Well, we have a mitigation right here. This allows for expansion. Another mitigation here, which allows for expansion. Another mitigation here, which allows for expansion. Another one here, expansion. Another one here, expansion. Cool. So we can clearly see that we're in a bullish trend using our daily time frame. And the reason why I don't want you guys to use supply and demand zones, break of structure, change of characters, inversion fair value gaps, or any of that rubbish is there's no need. And the reason why it's not needed, well, is because if you guys jump in the lower time frame, everything will look like a change of character, a break of structure, a inversion fair value gap, and then you guys will just get chopped up and your bias is all wrong. So here you could argue that price has swept liquidity, has a bearish change of character or break of structure, and there's a bearish fair value gap or a bearish supply zone, and now you're shorting and you're getting wrecked in a bullish market. It's so easy to get trapped here and just stack losses upon losses, right? You might get an entry on this candle here, and you might get another sweep of liquidity here on the lower time frame and then get wrecked there. So instead of actually focusing on all of that, we just want to be focusing on our fair value gaps, and we're not just going to be using the 1 hour time frame. That's what makes our fair value gap so OP, is that we can use our higher time frame and then reconfirm them in the lower time frame. So this same price action, if we go to the 4 hour, we have a 4 hour fair value gap. Okay, we have a 4 hour bullish fair value gap. From this swing low to this swing high, there's a 4 hour bullish fair value gap. But then in conditions like this, you might get wrecked. How so? Because there's another 4 hour fair value gap. So you might, again, be looking at this 4 hour fair value gap, take a loss, and then mark this fair value gap and start looking for shorts. Now, as I said earlier, if we use our higher time frame, it's so easy to not get caught up in this mess. We don't even need to mark out this 4 hour fair value gap. We don't even need to mark out any 4 hour fair value gaps in this time frame. Okay? Because even on this time frame, even in a higher time frame, there might be a change to the delivery, a break of structure, a bearish 4 hour fair value gap, and you guys might be using that to target this low down here, or maybe this fair value gap that has not been mitigated. However, if we jump back to the daily, we can see that price has a daily fair value gap. So we want to see price actually start creating bullish 4 hour fair value gap once we start having that mitigation. Go back to the 4 hour. Now we know price needs to mitigate the daily fair value gap. A daily bullish fair value gap is more powerful than a bearish 4 hour fair value gap or bearish 1 hour fair value gap. As I said earlier, your break of structures and change of characters don't really exist. That's going to get you caught up. So now with this daily fair value gap, we still have this 4 hour fair value gap, but we're going with the expectation that this is going to fail, right? This is a fake fair value gap, which I do talk about with my students. So if you guys are interested in learning about fake fair value gaps and fake tops and fake bottoms, I do highly recommend joining the Discord. But again, this fair value gap, we're going with the expectation it's going to be disrespected. It might cause some sort of retracement, but the high that's created here is fake, okay? So what we can wait for here for a daily bullish 15-minute fair value gap, as if we're just confirming the daily fair value gap. Okay, so I'll make this easier for you guys. Go to the daily. So I'll make this easier for you guys. Go to the daily time frame. Use your vertical line here. We have this candle here acting as a manipulation candle, and our Friday candle is going to act as a distribution, and Monday is going to make the low for the next week and continue that expansion. All right. So weekly profile is being used, and I see so many traders talk about don't trade Mondays or don't trade Fridays and all that rubbish because they don't know why you should be trading it and when to actually trade it. I'll talk about weekly profile, monthly profile, every profile in the Discord. But again, let's continue. So we have Thursday mitigating the daily fair value gap. Okay, this can either expand or Friday can expand, and Monday, Tuesday, Wednesday can continue that expansion. Okay, and the reason why is we're still in sync with the monthly profile. So we have this daily fair value gap, mitigation on Thursday, and we're expecting an expansion on Friday. Okay, so even if Thursday continued the expansion, Friday is still a tradable day. So we could use our vertical lines, slap that there, and slap this here. We're gonna be putting our focus on Friday. So we'll go back to the 4-hour, and that means we're gonna be putting our focus on after the mitigation of this 4-hour fair value gap. So it's almost a safety net. So we don't get chopped up on this 4-hour fair value gap. We don't look for longs here and then get wicked out, and then price continues that expansion. Okay, so we're actually using our Friday as a trading day. Now we'll go back to the 15-minute, and now on the 15-minute, what we're going to be putting our focus on is the daily profile. Okay, so we have this 4-hour fair value gap that creates a retracement. So we're not looking for shorts, we're rather looking for longs, and we could use our 15-minute time frame to look for entries if we're just trading the daily profile. Now you guys can have a sniper entry the lower the time frame you guys go. So we have this retracement, cool, and now we're going to be waiting for our bullish fair value gaps. And as we wait for our manipulation, a fake move lower, and you guys can see when our bearish fair value gaps right here no longer push price lower, we're actually making the wick on the daily candle. So we're trading Friday as a bullish candle. Our entry can be very, very simple. Okay, our entry can just be this 15-minute fair value gap. Stop loss can be below this swing low here, or even this one here. It doesn't really matter. And you guys can just go for a 2-3R and then let the trade run to our overall drawn liquidity. Understand that Monday is going to continue. You guys can actually play this smart and trade the next weekly profile as a continuation. Now, for a sniper entry, all we're going to be doing is just waiting for a lower time frame. As I said earlier, if we just go to the 5-minute fair value gap, we could just have a 5-minute fair value gap entry just like this. Stop loss below the swing low. Cool, and just go for a 2-3R and then let the trade run to our overall drawn liquidity. The main reason why we don't have to wait for a high time frame fair value gap here is we do have time, and we don't need to wait for more fair value gap, is we do have time and price, which again I do talk about with my students. But again, we do have this 5-minute fair value gap, and we could also see our bearish 5-minute fair value gaps no longer displacing price lower. So we have a change in order flow. We have bearish fair value gaps no longer pushing price lower, and then bullish fair value gaps now in control of the markets. You guys can do the same thing with your 1 minute, 15 seconds, whatever, but just understand it gets more riskier the lower the time frame you guys go, because you guys don't really have a high time frame bias. Now, if you remember what I said earlier, it's so easy to get baited into thinking price is bearish. And the reason why is a lot of you guys trade structure, because you guys just trade structure and you guys are trading blindlessly. All right. So you might have this as a break of structure. You might see a retracement to a supply zone up here and then another break of structure like this. And now you guys are shorting from supply zones like this one here or this one right here. And you guys are just getting wrecked. So now you guys know how to use your daily fair value gaps, not getting baited with fake break of structures, how to trade your profile, your 4-hour profile, your entries, all that just using fair value gaps. We haven't used anything besides fair value gaps and also our daily profile. So this video is a bit more advanced using our profiles, but again, it's so much more easier just understanding when a candle is going to expand using our fair value gaps.